Today, we're going to explore a topic that continues to spark debates among economists, financial analysts, and technology enthusiasts: why Bitcoin will never be a global monetary reserve. Despite its revolutionary impact on the financial landscape, Bitcoin faces critical limitations that make it unsuitable as a global monetary reserve asset. Let's break down the reasons in detail, while also considering its merits and potential future challenges. 1. Extreme price volatility. One of the most significant reasons Bitcoin cannot serve as a global reserve currency is its extreme price volatility. Unlike traditional reserve assets such as gold or US Treasury bonds, Bitcoin's value fluctuates wildly within short periods. A reserve asset needs to provide stability and predictability, enabling governments and institutions to manage currency reserves and balance payments effectively. Bitcoin's price is highly sensitive to speculative trading, market sentiment, and regulatory news, making it unreliable as a store of value on a macroeconomic scale. For instance, in the span of just a few months, Bitcoin has experienced price swings of over 50% up or down. Such volatility poses a significant risk for central banks that require stable assets to back their currencies and maintain economic stability. 2. Scalability and transaction efficiency. A global reserve currency must be capable of handling massive volumes of transactions efficiently. Bitcoin's blockchain, while secure, suffers from scalability issues. The network's current transaction processing speed is limited to around 7 transactions per second. In contrast, payment systems like Visa can handle upwards of 65,000 transactions per second. This bottleneck creates delays and increases transaction fees during periods of high network congestion. Despite advancements like the Lightning Network, Bitcoin's underlying design remains fundamentally constrained in terms of scalability. A reserve asset needs to support high liquidity and instantaneous transfers across borders, requirements Bitcoin struggles to meet. 3. Lack of intrinsic value and backing. Traditional reserve assets derive their value from underlying economic fundamentals. Gold, for example, has intrinsic value due to its industrial applications, scarcity, and historical role as a medium of exchange. Fiat currencies like the US dollar are backed by the economic strength and fiscal policy of sovereign governments. Bitcoin, however, lacks intrinsic value in any form of backing by a tangible asset or government. Its value is primarily driven by market perception and speculative demand. While Bitcoin enthusiasts argue that scarcity, with a cap of 21 million coins, gives it value, scarcity alone does not provide the stability or confidence needed for reserve status. 4. Regulatory and legal challenges. Global reserve currencies must operate within a robust legal and regulatory framework that fosters trust and security. Bitcoin's decentralized nature, while innovative, also makes it a target for regulatory scrutiny. Governments around the world have expressed concerns about its use in illicit activities, tax evasion, and financial instability. The lack of uniform regulation creates uncertainty. Reserve currencies require clear, enforceable legal structures to ensure transparency, anti-fraud measures, and monetary control. Bitcoin's association with anonymous transactions and regulatory loopholes makes it an unlikely candidate for mainstream reserve adoption by central banks. 5. Energy consumption and environmental concerns. Bitcoin's proof-of-work consensus mechanism consumes massive amounts of electricity. As of 2025, Bitcoin mining consumes more energy annually than many mid-sized countries. A global reserve currency must align with sustainability goals and environmental responsibility, both of which are increasingly critical in global economic policy. The environmental impact of Bitcoin mining poses a significant barrier to its widespread adoption by central banks and financial institutions aiming to reduce carbon footprints. Transitioning to more energy-efficient technologies or consensus mechanisms may alleviate some concerns, but Bitcoin's current design remains environmentally unsustainable. 6. Alternative digital currencies and CBDCs. Central bank digital currencies, CBDCs, represent a more viable future for digital monetary systems. Many central banks, including the People's Bank of China and the European Central Bank, are developing their own digital currencies. CBDCs offer the benefits of blockchain technology while maintaining the backing of sovereign states. Unlike Bitcoin, CBDCs are designed to integrate seamlessly with existing monetary policies, provide regulatory oversight, and offer price stability. Their development highlights a growing consensus that digital currencies with centralized governance are more appropriate for reserve use than decentralized cryptocurrencies. 7. Limited adoption as a unit of account. A reserve currency must serve as a reliable unit of account. Bitcoin's price volatility makes it impractical for pricing goods and services in the global economy. Businesses and consumers need predictable and stable pricing mechanisms, which Bitcoin's fluctuating value cannot provide. Most global trade is still conducted in US dollars, euros, or other stable fiat currencies. Until Bitcoin can achieve widespread adoption as a unit of account, a highly unlikely scenario given its inherent volatility, it cannot fulfill the fundamental requirements of a reserve currency. 8. Bitcoin's strengths as a digital asset. Despite its shortcomings as a reserve currency, Bitcoin has undeniable strengths as a digital asset. Its decentralized nature provides an alternative to traditional financial systems, offering a hedge against inflation and currency debasement in certain economies. Bitcoin's deflationary supply structure, with a hard cap of 21 million coins, can appeal to investors seeking a store of value outside of fiat systems. Additionally, Bitcoin has pioneered the use of blockchain technology, which has driven innovations across various industries. Its role as digital gold makes it attractive for portfolio diversification, particularly in an era of low interest rates and economic uncertainty. 9. Quantum computing risks. Another future challenge for Bitcoin is the potential advent of quantum computing. Bitcoin's security relies on cryptographic algorithms that could theoretically be broken by powerful quantum computers. While current quantum technology is not yet advanced enough to pose an immediate threat, rapid progress in this field raises concerns about the long-term viability of Bitcoin's encryption. Efforts to develop quantum-resistant cryptography are underway, but the transition to more secure algorithms would require substantial changes to Bitcoin's protocol. A failure to address this issue in time could compromise the integrity of the entire network, leading to severe consequences for its value and adoption. Conclusion: while Bitcoin has transformed the financial world by introducing decentralized digital currency and blockchain technology, its limitations prevent it from becoming a viable global monetary reserve. Extreme price volatility, scalability issues, regulatory hurdles, lack of intrinsic value, environmental impact, and the emergence of CBDCs collectively undermine its suitability. However, Bitcoin remains a valuable digital asset with unique strengths. It offers a hedge against inflation, promotes financial inclusion, and serves as a catalyst for technological innovation. Yet, the risks, including future quantum computing threats, must be addressed for it to maintain long-term relevance. As we look to the future, digital currencies will undoubtedly play an increasingly prominent role in the global financial system. The form they take will likely align more closely with centralized, regulated, and environmentally sustainable models than with Bitcoin's decentralized framework. Thank you for watching. If you enjoyed this analysis, please like, share, and subscribe for more content on finance, economics, and technology trends. Let us know your thoughts in the comments. Do you see a future for Bitcoin as a reserve currency, or do you agree with the challenges we discussed? Stay tuned for more insightful discussions.